Hey guys, it is Julie here with JT.Wealth. In today's video, we are going to take a look at some noteworthy earnings reports coming out this week. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, we have some noteworthy earnings reports coming out this week. So in today's video, we are going to take a look at 6 different companies and what the expectations around their earnings report are. And just before we get into all of those companies, this is just your friendly reminder to make sure that if you enjoyed this video, you give it a big thumbs up and leave your thoughts down below in the comments. Other ways to support the channel are by checking out some of the links we have in the description below. This includes a link to my Patreon page, which gets you access to our Discord chat group. Plus, there's some awesome referral bonuses if you're looking to sign up for a new investment account. And just as a reminder, right now you have 2 days left until November 18th to get 3 free stocks from Webull for signing up and funding your account. So make sure to check them out. Okay, so Investors Place has a great article that highlights some of the big earnings report this week. And we are going to be taking a closer look at Walmart, Home Depot, NIO, Target, Nvidia, and Intuit. And the first one that we will be taking a look at is Walmart. And they report Tuesday, November 17th before market open. Earnings reports from the country's biggest retailer always get a fair amount of investor attention, and earnings next week will be no different. In fact, Walmart earnings probably are even more important than usual. Given Walmart's e-commerce growth, there isn't a company in the country that can be better highlight how customers shopped in the third quarter. There also isn't a company better plugged into consumer behavior, and so management commentary will be scrutinized as well. Simply put, Walmart earnings next week will move Walmart stock, but they could also move the entire market. The earnings whisper for Walmart is $1.27 per share. Consensus estimates from analysts are coming in at $1.19 per share, with revenue at $131.79 billion. Their ticker is WMT and is currently trading at $152.96. Next company is Home Depot. And they report on Tuesday, November 17th before market open. Now, Home Depot doesn't have quite the same reach, but every investor in the housing and construction sector will be watching its earnings closely. Home Depot has been a somewhat surprising pandemic winner, as consumers have taken the opportunity to improve their homes, and an expected exodus from pandemic-hit urban areas suggests higher demand over the long haul. But in recent months, the news hasn't been quite as rosy for the HD stock, which has stagnated since mid-August. So this is also a big report for Home Depot itself. A big quarter could change the narrative, particularly if Home Depot can show that it's still outperforming its rival Lowe's, which reports the following day. Any kind of stumble, however, could not only threaten HD stock, but the thesis that's underpinned a rally across its entire sector. The earnings whisper for Home Depot is $3.15 per share, with analyst consensus estimate at $3.08 per share, and revenue coming in at $31.44 billion. They trade under the ticker HD, which is currently at the price point of $276.85. The third company on our list today has been somewhat of a hot topic lately, and that is Chinese electric car company NIO. And they will be reporting on Tuesday, November 17th after market close. NIO stock is roaring into Tuesday afternoon's earnings release. The stock tacked on another 12% gain on Thursday after rival XPeng posted a blowout quarter of its own that suggested not only strong demand, but the ability to take pricing. With the rally, NIO has gained an incredible 1,100% so far in 2020. That is the 7th best performance of any stock listed on the US exchange, and far away the best any company with a market capitalization over $6 billion. That rally obviously means NIO needs to deliver an impressive report of its own. Investors almost certainly will focus on one key metric: gross margin. NIO has generated improvement on that front in recent quarters and promised more gains. The rally in XPEV seems driven by that company's own positive figure. Meanwhile, revenue is unlikely to surprise, given that NIO already has disclosed vehicle deliveries for the quarter. It's tempting to assume that perhaps NIO stock will stumble, given the parabolic gains ahead of the release, but at this point, investors bet against the stock at their peril. The earnings whisper for NIO is a loss per share of 12 cents, with an analyst consensus of a loss of 17 cents per share, and revenue of $628 million. Trading under the ticker NIO, they're currently at $44.89 per share. Next up is Target, and their earnings report is Wednesday, November 18th, before market open. It's easy to forget that not much more than a year ago, Target seemed like a disappointment. Target stock has been dead money for about 4 years. Investors were skeptical that the company had the skill or the scale to execute its own omni-channel strategy. All Target has done has grown earnings at an impressive rate and watch its stock rise 123% over the past 18 months. And so the mission for Target is simple: keep doing what it's been doing. Another strong quarter should keep the rally going, given a reasonable forward price to earnings multiple of just 21 times. Reinstated full-year guidance could provide a boost, though a second wave of the virus cases may make that impossible. But again, Target doesn't need a massive surprise. That's what happens when a company starts delivering and drives investor confidence. As long as that confidence remains intact after earnings, Target stock should be just fine. The earnings whisper for Target is $1.70 per share, with an analyst consensus of $1.58 per share, with revenue at $20.68 billion. Their ticker is TGT and trades right now at about $165 per share. Next up is the chip maker company Nvidia, who reports Wednesday, November 18th after market close. Now, Nvidia has been one of the best mega cap stocks of 2020, rallying some 129%, but there are some slight cracks starting to show. Nvidia has stalled out over the past 10 weeks, and it actually trades below early September highs. Post-election trading has showed some volatility, including back-to-back 6% declines on Monday and Tuesday. There are some signs that investors are starting to get just a bit concerned about valuation. No surprise, given that Nvidia stock trades at 48 times next year's consensus earnings estimate. Of course, those same concerns seem prevalent across the market, which makes the post-earnings trading in Nvidia worth watching closely. If Nvidia delivers a blowout report and investors shrug, that would suggest that the easy money has been made. It would also bode poorly for other 2020 high flyers whose stories aren't nearly as attractive. With an earnings whisper of $2.70 per share, an analyst consensus estimate at $2.56 per share, and revenue at $4.42 billion. Nvidia trades under the ticker NVDA, currently at $534.79 per share. And last but not least is Intuit, who reports Thursday, November 19th after market close. Intuit stock will provide another test for the market when it reports Thursday afternoon. Intuit's story isn't quite as powerful as that of Nvidia, but it's still one of the best positioned companies in the world. Yet at a 36 times forward earnings and a rally that has stagnated as of late, Intuit has its own valuation concerns. But there's another aspect to Intuit earnings that makes the report worth checking out, and that is the company's reach. Intuit serves customers ranging from individuals to small and medium businesses at a time when the health of those customers is still up in the air. If Intuit is confident in its customers, investors should be too. The earnings whisper for Intuit is 0.48 cents per share, with an analyst consensus of 0.37. Revenue is $1.2 billion, trading under the ticker INTU. They currently trade at $356.56. So those are some of the highly anticipated earnings reports coming out this week. Other honorable mentions include Lowe's, Macy's, and Foot Locker. But of course, there's tons of companies reporting this week, so leave it down below in the comments if there's any others that you are keeping your eye on and what you think of the ones that we listed here today. You know, I always love hearing from you, so make sure to leave your thoughts down below. If you made it all the way to the end of the video here, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.